Hey everyone, welcome back to Corporate Decoder, the place where we unlock the secrets hidden in plain sight. Today we're diving deep into a company that has been fighting to keep its spot on a major stock exchange. And let's just say it has been a nail biter. Alright, so what we have here is a report from Focus Universal Inc., or FCUV as you might see it traded. Think of this filing as a current report, meaning something significant just happened or is being announced right now. The date here is the 17th of December 2025. This company is incorporated in Nevada and trades on the Nasdaq capital market. The main thing happening here is that Focus Universal Inc. is telling the world they believe they've regained compliance with the rules to stay listed on the Nasdaq capital market. Now, why is this a big deal? Well, for a company to be on a major exchange like Nasdaq, it has to meet certain financial benchmarks. If it doesn't, it risks being kicked off the exchange, which is a huge problem for investors and the company alike. Nasdaq has rules about how much a company's stock should be worth, for instance, and also how much value their shareholders own. This value is called stockholders' equity. Focus Universal Inc. had been notified by Nasdaq that they were not meeting these requirements, specifically a rule about their market value of listed securities, or MVLS. This is basically the total value of all their company's stock trading on the market. Nasdaq told them that their MVLs had fallen below $35 million. Now, if a company's stock value dips too low, Nasdaq can say, sorry, you don't meet our standards anymore. But thankfully, Nasdaq gives companies a grace period to fix the problem. For Focus Universal, this grace period was 180 days. Ending on the 29th of December 2025. During this time, the company had a few ways to get back in good standing. They could either see their stock market value climb back up to at least $35 million for 10 consecutive business days, or to raise an alternative path. They could increase their stockholders' equity to at least $2.5 million. Another option is for them to show they've made a solid profit from their ongoing business operations. Either $500,000 in the last year or in 2 out of the last 3 years. So what did Focus Universal Inc. do to get back on track? Well, they got creative on the 27th of October 2025. They announced a private placement, which means they sold shares directly to specific investors without offering them to the general public. They sold 750,000 shares of something called Series of Preferred Stock for a total of $3 million. That breaks down to $4 per S-share. Now, this wasn't just any sale, it was led by Edward Lee, who is the chairman of the company's board of directors. Then, on the 17th of November 2025, the investors who bought those series of preferred shares decided to convert them into regular common stock. This is a common move with preferred stock, where investors essentially swap their preferred shares for more common shares, often at a prearranged ratio. In this case, they issued 825,000 shares of restricted common stock. All of the series of preferred stock has now been converted, meaning there are no more shares of that type outstanding. The crucial part here is that after these transactions, Focus Universal Inc. believes their stockholders' equity has surpassed that $2.5 million threshold required by the equity rule. This is a big win because it means they likely won't be delisted from Nasdaq. They are waiting for Nasdaq's official confirmation, but based on their calculations, they've met the requirements. Now, looking at this situation, it is clear Focus Universal Inc. was in a tough spot. Their stock value had dropped significantly, putting their Nasdaq listing at risk. This kind of situation can spook investors and make it harder for a company to raise money in the future. The solution they found, a private placement followed by a conversion, seems to have been a strategic move to boost their equity quickly. What is interesting is how they use preferred stock as a tool. By issuing preferred stock, they could raise capital. And then the conversion into common stock helped dilute the existing common stock while increasing the overall equity on paper. It's a bit of financial engineering. However, an important note here is that while they believe they've met the equity requirement, Nasdaq will continue to watch them closely. If they dip below the required standards again by their next periodic report, they could still face delisting. So what is our take on this? Focus Universal Inc. has managed to navigate a tricky situation and is likely to stay listed on Nasdaq, at least for now. This shows resilience and a willingness to take action to meet listing requirements. The company is showing us it can be resourceful. However, the underlying issue of stock performance remains. The fact that their market value of listed securities fell so low in the first place suggests there are still challenges ahead. Investors will be watching to see if the company can sustain its performance and not just meet the minimum requirements, but truly thrive. The real test will be their ability to generate consistent profitability and growth that translates into a robust stock price over the long term. This move has bought them time, but the real work of building a continuously valuable company is far from over. Alright, that is our breakdown of this FCUV filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.